Hello, seafood friends. You're listening to Catch the Current, the coolest seafood podcast out there from the team at Undercurrent, bringing you everything from the boat to the boardrooms, breaking down the news, spilling a little industry fish oil, and sharing the sharp market insights you need to know. I'm Amanda Buckle.
And I'm Lauren Castiglione. Well, if you had Trump invests in Japanese sushi chain on your 2026 bingo card, then we have some great news for you.
According to President Donald Trump's latest financial disclosure filing, his portfolio includes Japanese sushi conveyor belt company Kura Sushi. So this report was filed with the U.S. Office of Government Ethics, and it shows he purchased between $1 million and $5 million worth of shares in the company back on February 2nd.
For anyone unfamiliar with Kura Sushi USA, is the American arm of Japanese-based Kura Sushi, one of the fastest growing conveyor belt sushi chains that became wildly popular with younger diners and social media loving customers. The company is currently valued at around $600 million and trades on the NASDAQ stock market.
The filing itself clocks in at 113 pages, and under federal disclosure rules, transaction reports only reveal ranges, not exact dollar amounts, which is why we can only say that the investment falls between $1 million and $5 million.
Now, before anyone starts imagining Trump personally loading up on spicy tuna rolls while day trading sushi stocks, a spokesperson for the Trump organization told Bloomberg the president isn't directly making investment decisions himself. Instead, the spokesperson says his assets are managed independently by third-party financial institutions that handle all investment activity. Still, it's a pretty interesting bet on the restaurant sector, especially at a time when consumers are still balancing inflation pressures with dining out spending.
But if there's one thing the seafood industry has learned over the last few years, it's that sushi demand in the U.S. just keeps rolling along.
Nice mom joke, Amanda.
Thank you. And for anyone wondering why these filings matter in the first place, periodic transaction reports are required by the U.S. Office of Government Ethics under the Ethics in Government Act. The idea is transparency. So senior U.S. officials, including the president, have to disclose stock purchases, sales, and other financial trades within a relatively short period after they happen. That gives the public, investors, and watchdog groups a chance to monitor potential conflicts of interest and keep tabs on investments in publicly traded companies.
And Kura Sushi wasn't the only consumer-facing name showing up in the filing. The disclosure also included investments tied to major retailers and restaurant operators like Walmart, Target, Costco Wholesale, Chipotle Mexican Grill, and McDonald's, part of more than 3,700 trades listed in the report.
But the really interesting angle for you seafood listeners is the bigger story happening around conveyor belt sushi in the US. Japan's conveyor belt sushi giants are making a major push into the American market right now, and Kura Sushi has become one of the most aggressive players in that expansion race. The company entered the US back in 2008, and since then it's grown to 88 locations across 22 states and Washington, D.C., and that growth is accelerating. Kura opened 15 new US stores in 2025 alone, and another 16 locations are expected to open in fiscal 2026.
Financially, the growth story has been pretty strong too. The company's U.S. business generated roughly $290 million in revenue in fiscal 2025, up more than 17% year on year, while also turning profitable for the first time. And Kura is forecasting fiscal 2026 sales between $330 million and $334 million. Investors definitely reacted to the Trump disclosure. Shares surged Monday after news of the filing became public, which is notable because the stock had actually been under pressure recently amid earnings volatility and management turnover concerns. That includes the departure of CFO Jeff Utz, who spent the last 4 years helping lead the company's U.S. expansion.
And Kura's not alone here. The broader U.S. conveyor belt sushi market is heating up fast. Just earlier this month, another major Japanese chain, Sushiro, announced plans to open its first U.S. location in New York City this fall. Sushiro already operates more than 800 stores globally, and the New York launch is part of a much larger international growth strategy. The company is aiming to push international sales to 35% of total revenue under its fiscal 2024 through 2026 expansion plan.
So between aggressive Japanese expansion, growing U.S. appetite for sushi, and now a presidential investment disclosure, you can say that conveyor belt sushi is suddenly having quite the moment.
Well, enough about sushi for now. It's Memorial Day weekend, and that means grilling season is officially upon us. Let me set the picnic table here for us. While consumers are still expected to spend heavily on food, travel, and dining over the coming months, new research suggests Americans are becoming much more careful about where those dollars go, something seafood suppliers, retailers, and restaurants will be watching closely. A new U.S. consumer survey from consulting advisory firm PwC found Americans plan to spend an average of more than $2,800 in summer travel this year, with roughly 400 of that earmarked for food and dining alone. The survey also found that 71% of consumers plan to spend the same or more on travel than they did last year, pointing to continued demand in tourist-driven markets and a potentially strong season for seafood sales tied to travel, grilling, and dining occasions. But the data also points to growing pressure on household budgets. Nearly a quarter of respondents said they plan to cut back on travel spending this summer, and restaurant meals are among the first areas consumers say they would trim. That aligns with separate findings from KPMG showing 2/3 of Americans are eating at home more often because of cost concerns, while value-focused dining and quick service options continue gaining traction. So, what does all that mean for seafood markets as the summer season gets underway? Well, joining us now to share some insight and help us kick off the unofficial start of summer is Undercurrent Price reporters Gary Morrison and Ben Fisher.
Yeah, Amanda, you can feel it already. Memorial Day is upon us, summer is coming on, and temperatures are heating up across the country. And whenever the summer arrives, Americans start making choices about what's going to go on the grill. You've got burgers and hot dogs, certainly staples. But here on the seafood side of things, one moderately priced option that a lot of consumers turn to at this time of year is yellowfin tuna, especially tuna steaks. They grill very nicely, they feel premium without breaking the bank, and they're a popular warm weather protein. But this year, yellowfin tuna is getting caught up in the broader inflation story that we see affecting the seafood industry. So according to Undercurrent's latest U.S. wholesale price assessment, frozen yellowfin tuna steaks are currently ranging somewhere between $4.80 and $5.15 a pound, depending on the size you're looking at there. And while that may still sound relatively affordable compared to some other seafood items, those prices are up considerably from where they were when Undercurrent first launched its U.S. wholesale assessment for yellowfin tuna last year. And it's not just a simple supply-demand story. This is tuna prices which are being squeezed by multiple inflationary pressures hitting the supply chain all at once. One of those major factors is fuel. Elevated fuel costs tied in part to disruptions around the Strait of Hormuz are increasing costs across the board. Fishing vessels burn a lot of fuel, so when energy prices spike, those seafood prices that they catch tend to follow. But it doesn't stop there. We're hearing reports that Indonesia, one of the world's key tuna producing regions, instead of fishing at all, some fishermen are just tying up their vessels because operating costs are becoming too expensive. We're hearing from some sources that trend's starting to reverse, but it shows how sensitive the supply chain is. And then you move further down the supply chain, higher transportation costs, more expensive cold storage, and even rising plastic packaging costs. A lot of seafood packaging relies on petroleum-based materials, and so that has gotten more expensive as well. It's not just tuna steaks, but across multiple product forms, we've seen prices come up. Poke cubes, saku blocks, and tuna loins have all crept up in recent weeks. And so it looks like what the consumer is going to pay at the counter for a tuna steak this year may be significantly more expensive than it was just a few weeks back.
Ben, when you talk about all those factors, I think a lot of people forget about all those, like the packaging, those silly little extra things that help your food item come to your plate.
It's all baked into what you pay at the grocery store.
Yeah. Gary, what's going on with lobster?
Well, lobster tails are incredibly popular for Memorial Day, but certainly how they're consumed differs significantly from some of the midsummer, late summer, or even winter time traditions. So Memorial Day, as Ben mentioned, kicks off the unofficial start of summer, which also means backyard grilling, right? So frozen lobster tails are a major retail focus across the U.S. because they make a great add-on to anything that you have on your grill, specifically surf and turf, right? We know U.S. consumers love their beef, so there's going to be a lot of meat on the grill, whether it be hamburgers or steaks, but lobster tails certainly offer a nice complement. Put them on for that surf and turf that we just talked about. What's happening in the market right now, though, that U.S. consumers have to pay attention to? There has been some easing of live lobster prices over the last few weeks as the Canadian season has kicked off. The only caveat there is landings have been delayed by weather a little bit. They're just starting to make their way in, so there hasn't been much processing. That has provided a slight floor to pricing here in the U.S. wholesale markets. Inventory has been paired from the carryover that we had last year, so it's a limited amount of product. So that extra time, because of the weather delays, has given a longer off ramp to processors and sellers that had inventory to move. So it provided that price floor for them. What you can be looking at traditionally here in the U.S. is the cold water lobster tails are significantly more attractive for these summertime barbecues because of the ease and difference of cooking. They're a little bit more forgiving when you put them on a grill, and they have a little bit more forgiveness in terms of time. So unless you're a really, really great chef, maybe you want to focus on those cold waters, as warm water tails tend to have a little bit of a less forgiveness in terms of cooking. So, but in terms of price, buyers and consumers have been looking at price as inflation and those costs that Ben talked about really hit wallets. So as prices have stayed elevated, it's certainly worth looking to some alternatives. So some buyers have seen the larger warm water tails, again, that have a little bit higher of a water content and a little bit more delicate, have a better pricing structure right now than the cold water tails. So there are alternatives, but make sure you cook them correctly so you get the best out of that quality.
All right, Lauren, do you have better news for scallops?
Well, kind of. So the scallop market is reflecting a split that we're kind of seeing across consumer spending right now. On one side of the market, smaller scallops like 10 to 20s and 20 to 30s are becoming more available as New Bedford landings improve seasonally, and the majority of the catch continues falling into those categories. That's creating some softer undertones in the market and a little bit more of flexibility on pricing for buyers that are focused on value. But the premium large count scallops, those U10s, U12s, remain extremely tight. So those larger scallops, they still make up a very small percentage of overall landings. And inventories carried over from last season are pretty much non-existent. So, and heading into summer, this is when we see restaurant demand, tourism, food service activity really start ramping up. Large scallops are a premium summer menu item, especially around the holiday weekends and outdoor dining and higher end restaurants. So while consumers may be pulling back in some areas, there still is some demand for the premium experiences, and that's continuing to support the top end of the scallop market. So overall, the scallop market heading into Memorial Day and the summer season remains very size dependent.
Lauren, you talk about premiums, and that reminded me last year when Gary brought up crab, and we were like, what parties are you going to? Because we want to be there. I don't think anyone's having crab at their parties this year, though.
I don't think this summer.
All right, well, that does it for us. Be sure to check out Undercurrent News, and we'll see you back here on the pod next week. Bye-bye.